Hello, Namaskar viewers. I am Sanjeev Pandya welcoming you to this week's edition of the Tax Talk with AJ right here on ITV Gold. As you know by now, every week we bring you latest updates, latest that you really need to know about taxes, your personal taxes or even a corporate taxes. If you are a business owner, you also need to know that what exactly is happening in corporate taxes. So we give you all the updates and all the changes that's been made by IRS for this year, and we bring you that so that way when you go to file your tax return, if you haven't filed yours, then that will help you to understand that what are the options you have. And when you talk about filing your tax returns, before you do anything, you should consider giving Sai CPA Services a call. Sai CPA Services are very reputable accounting firm located in state of New Jersey with multiple locations, and they are known to do taxes right for their clients. Refund? Yes, that's a one question. How much refund? Low, high? That's another question. But most importantly, do your taxes right. So that way, chances are that your tax return will not be audited. And the Sai CPA Services, with their on-hand trained, experienced, multiple CPAs will guide you in the right direction once you give them a call. 908-380-6876 or visit SciCPAServices.com. With that note, I'd like to welcome Mr. A.J. Kumar of Science CPA Services to the show. Sir, good to have you.
Thank you, Sanjeevji. Thank you for the kind introduction and very well put. Doing it right is what we focus on. We are not worried about the refund. Everybody wants the maximum refund. But what we specialize, what we want you to be thinking about is doing it right. So you don't have to look back, you don't have to worry about it. IRS has at least 6 years. And if they find something big, if they find that it was intentionally missed, there is no statute of limitation. They can go back as many years as they want. Do you really want to be worrying about it? So do your taxes right, refund or the liability is what it is. But make sure it's done right.
Absolutely, and I believe in that because, you know, like I said, that I know how Science CPA works, and I know that how they have made their clients, individual clients or corporate clients, really happy and satisfied over the years. And I like to add one more thing, is that Science CPA Services believes in doing a taxes right. That also means that if you're eligible for certain deduction that's coming your way, Sai CPA Services will let you know, will advise you that, listen, you know, your category is so much, you are in this much bracket, your company is so and so, your individual is so and so, you are entitled to have this deduction, and that will help you also. So that's what you should look for in the experienced CPAs when you file your tax return. With that note, today's episode, we're going to talk about certain deductions. One deduction is very easy that people really like to take advantage of that deduction, and that's the travel, meals, and entertainment. AJ, isn't that very catchy category?
Absolutely. So you cannot have a business when you're not traveling. When you have a job, you're traveling as well. When you're traveling, you will have to eat. Sometimes you take people out for your business. So even if you're doing some charitable work, travel goes hand in hand. So travel, meals and entertainment is a very common category that we see on everyone's tax return. And today's episode is going to focus on travel, meals and entertainment expenses. We'll go further detail if you're buying a vehicle, how heavy the vehicle is, how do you implement, how do you take advantage of section 179 deduction. We'll go into detail, but focus for today's episode is going to be travel. So stay tuned.
Yes. Now travel, you know, how does this work? Is it by mileage and then along with the travel, excuse me. So when it comes to travel, how does it work? By mileage that you can have deduction, and then there is also very famous category, meals and entertainment. You know, how much is allowed in a meals and entertainment? Is it 50%? Is it 75%? Is it 100%? Do I need to save receipts or not? We need to know all the details from you today.
Absolutely. So it at a high level, it depends on your situation. Everybody's situation is different. Sometimes, depending on how big the business is, you can have the vehicle under the business name if you're using it at least for 50%, if not more. In some cases, when you're using the vehicle every now and then, it's easier, especially for self-employed people, to just look at the mileage rate. If you don't have a business and you are just computing the medical related mileage, or I go to the doctor's office every week. Okay, how far is doctor's office? Well, 50 miles. Then you have the medical mileage. Similarly, you can have charitable mileage. You do some charity work, you run some school, you do some, you go to
Volunteer,
temple, some
you do
volunteer
volunteer
work.
work.
All that counts. You just look at where do you live, how far do you go, so going back and forth, how many times you go in a typical year, you create a log out of it, and then you can use the mileage rate to compute that mileage.
Okay, so that's a mileage rate. Now, when it comes to meals and entertainment, you said that everybody's different, everybody's situation is different. I wanted to add a line that everybody is different. Yes, sometimes some people like to eat very often with their clients, an expensive meal also. So when it comes to a meal, let's say you take client out and the total entire dinner tab is, let's say, $200. All right, and a person has a S corporation. So how much can it be deducted?
Well, it depends again. So there is nothing straightforward when it comes to the tax system. You have to look at your own situation. Meals at a high level are deducted at 50% when you are taking somebody out. And the theory is when you are taking somebody out, you are eating it as well. You would have eaten anyway. So eating your food is not business related. It's not a business expense. Well, you can counter argue that I'm eating at an expensive place in this example only because of the client. But even then, IRS does not allow your own eating, your own meal deduction. So when you're taking out somebody, in our example, we'll take $100, 50% of the total meal deduction.
That's it.
That's it.
What about tips?
Well, everything included.
Okay,
Everything included 50%. Let's say $200 bill, you paid $20 tip, $40 tip, whatever you did. Total bill, how much did you pay? We'll take 50% as a reduction for the business expense.
So 50% is not bad. It's still better than not having anything.
Well, for last 2 years, we were allowed to have 100%.
Yes.
Under the COVID time, the government came up with a special ruling, and they said just to promote the restaurant, just to have people go out and eat and spend money, because nobody was going out after COVID. So for last 2 years, we had 100% meal deduction for 2023, starting 2023. Remember, the taxes we are doing are for 2023 right now. So meal is deducted at 50% when you are taking somebody out type of situation, when you have an office party, Christmas party,
100%.
holiday party. In those cases, meals are allowed at 100%.
Oh, what about every Friday party?
Well, if the meals are allowed for all the employees, meaning you're not restricting anybody, it's not just for you, it's not any special arrangement for somebody, in that case, it's allowed 100%.
Okay, so that's interesting. All right, so that's a meal and entertainment. And for travel, you said it depends upon whether it's your own vehicle, whether it's a company vehicle, and stuff like that.
Right, it's tricky with the travel, but at a high level, we want people to understand, we want our viewers to know that medical expenses, and we are talking about 2023. These numbers that I'm giving you are for 2023. So for medical expenses, you can compute the mileage and you can multiply it by 22 cents. All the mileage that you traveled for medical purpose, you can put it on Schedule A as medical expense multiplied by 22 cents. Meaning if you traveled 1,000 miles in the whole year for the medical purpose, you spend $220 on your medical expenses for the travel part. Similarly, donation, charitable work, volunteer work is counted at 14 cents. When it comes to business travel, it's tricky there. The business travel changed during the middle of the year. So for the first 6 months, all the business travel that you did is counted at 62.5 cents. The second half of the year was 65.5 cents. Again, please remember, the numbers I'm giving you are for 2023. The taxes we are doing now are for 2023. A lot of these numbers get inflated with the CPI. So for 2024, the travel right now is at 67 cents. But when you are doing this computation, and please make sure the onus, the responsibility remains on you to see the log. Where did you travel? How many miles? Where did you go? What was the business purpose around it? So you have to have a log created around it, and then you say for the first 6 months, 65.5 cents.
Not bad.
And for the second 6 months, July 1st to December 31st, you can go to 65.5 cents. So
Okay.
62.5 and 65.5.
Very well explained. In reference to the log that you maintain, that the taxpayer must maintain a log, my question to you is that regarding that mileage and the gas and everything, right? and then travel and entertainment, meals and entertainment, do they need to save all the receipts?
Well, not necessarily. Let's say if you are making the payments on a credit card and this credit card is paid, so the fact that the payment was made, at the end of the day, we are looking for a proof of payment. You can't just say, well, typically I go every Friday, sir. Well, how do you pay? Well, I don't know. Sometimes I pay cash, sometimes my boyfriend pays, sometimes my girlfriend pays. That doesn't count. You have to have the proof of payment that you made the payment. This is my check, this is my credit card, this is how I made the payment, and this is how it's related to the business and or medical purpose or charitable cause.
Okay. And one last question. I know it's a silly question, but as I always say that no question is a silly
Absolutely.
question. And
Absolutely.
viewers, I strongly recommend that when you call Science CPA Services and any question that you have on your mind, give them a call and ask them, because no question is a silly question. You explain about the receipts and you explain about the mileage and 62.5 cents or whatever it is. This is only for the mileage for the car that you or the vehicle that you're driving for. Any maintenance, any repair or any tolls are not part of that.
Well, the way they computed this amount is expected to be inclusive of everything.
Okay. I see.
So either you can itemize it or standard deduction. So when you're using the standard deduction, you use the mileage rate. This is my mileage, I drove 1,000 miles and this is the expense. When you say, I want to claim the itemized deduction, actual expense, then you show the gas receipt. It gets very tricky. Let's say if you have a gas full tank, $50. Now we want to know how much of that gas was used for business travel and how much of that gas was used for personal travel. Meaning on an average, at least on an average, how much of the total travel is done for the business purpose as opposed to the personal purpose.
Okay, got you. All right. Okay, so there you have it, all the information that you need to know regarding the mileage in the vehicle that you're driving for your job, and of course the meals and entertainment. So you got all the information, make a note of that. We're going to take a short break. When we come back, we're going to continue with this deduction matter, and we're going to bring in the vehicles, that how vehicles can also be part of section 179, right? That's what
Absolutely.
it is. And how that deduction works. So that's coming up right after this messages. Stay with us.
Did you know out of 213 million taxes that were filed last year, 81% were electronically filed? And when we talk about the individual tax filing, 93% individual taxes were electronically filed. So if you are not filing your taxes electronically, you are one of the 7%. Please make sure you file your taxes electronically. Not only it guarantees the accuracy, you get your refund faster.
Electronic filing is the thing, yes. Everybody should be filing electronically, and I'm surprised that some people still do file manually. In a couple of years, that will be 100% electronic
Absolutely.
filing. Okay.
Absolutely. It's
All right,
getting
so
there.
let's move on. Now let's talk about section 179, and that has to do with deduction for the vehicle. Now there is a heavy vehicle, light duty vehicle, light vehicle. These are the categories, and of course, Mr. AJ Kumar of Science CPA Services will explain to us in the detail how does that work.
Absolutely. So section 179 has been around forever. It has gone through many changes. At a high level, section 179 deduction relates to depreciation. So at a high level, please understand, when you buy the car for a business purpose, you can depreciate certain value of the car on your tax return. If you buy a car for $50,000 and you can depreciate, let's say, $40,000 out of it, you can bring your taxable income down. A lot of times when you're buying a car for $50,000, you don't pay $50,000. You only pay $5,000 as a down payment. So think about a situation when you paid only $5,000 to buy a car, and now your taxable income has gone down by $40,000. So if you are in 30% tax bracket, you save $12,000 only by paying $5,000 out of your pocket. So it's a great deduction. So please, section 179, if you have not heard about it, if you need to buy the vehicle, please make sure you read about it. You look into it.
Okay, all right. So now how popular this section 179 is?
It's extremely popular among the business people who buy the vehicles. Either they find it themselves, they find it on the internet, the accountants tell them, but a lot of people in the business community, who have vehicles or who buy vehicles or who have trucks, they will know about Section 179.
Okay, now let's say there is a company out there and then they have vehicles and everything, and they may not know about these deductions that's available to them, right? In that situation, what would you advise them? How would they know to make sure that they use this deduction?
Absolutely, great question, Sanjeevji. So, like any other tax rule, the onus remains on the taxpayer to know what they need to know. Meaning, if you pay more money than what you should be paying to IRS, IRS is not going to send you a letter, hey, by the way, you did not claim this deduction, here is your money. That's not how it works. If you claim more than what you should have claimed, they are happy to send you a letter. So the whole system is one-sided. The onus, the responsibility remains on you to know what you need to know, and that's why we have this tax show. That's why you will see a lot of information on internet, a lot of good accountants giving the right information. So please, if you have a business, if you ever buy a vehicle, trucks, small vehicle, large vehicle, you need to know about Section 179.
Okay, that is a good point that, especially for the business owners, small to mid-sized business owners, and when you buy trucks or any kind of vehicles, then make sure that you take advantage of that. Now, this leads me to a question. Again, not necessarily for Section 179, but for any individual want to know, like I said, that no question is a silly question. Nowadays, a lot of people have EVs. Okay, electric vehicles, because that's good. Everybody thinks they are saving money on the gas. They don't have to go to gas stations, stand in a line and whatnot. How does the EV vehicle, from purchase to maintenance of that, meaning, you have it this year, you have it next year, you have it there, how does that work, and is there any deduction every year that a taxpayer can use?
Absolutely, absolutely. So please remember, EV are a recent concept. These tax rules have been there forever.
Correct.
So when these tax rules were written out, they were not specifically written out for EV. Even though we have some special tax credits for electric vehicles, for buying the used vehicle, buying the new vehicle, installing the charging station. We covered in one of the last episode that we had. But Section 179 does not differentiate between a regular vehicle or EV.
Okay. That's a Section 179. But is there any other categories that EV deduction can be applied?
Absolutely. So electric vehicle have a separate credit for it. The government is trying to promote electric vehicle credit.
Right.
So they have some credits for the used electric vehicle. They have credits for the new electric vehicle. They have credit for the charging station for the electric vehicle. But just because a lot of these rules in general are there forever. So Section 179 specifically says, and a lot of people knows about 6,000 pound only. You ask anybody, you say, we are talking about Section, 6,000 pound, my car is not 6,000 pound. That's why I can't claim it. That's not how it works. Section 179 has 3 separate sections to it. So there's a specific section that's under 6,000 pound. There's a section that talks about over 6,000 pound, under 14,000 pound, meaning 3 ton to 7 ton. And then there is a section that talks about over 14,000 pound. So take a step back. There is a car, there is an SUV, and there is a truck, big truck out there.
Yes, absolutely.
So if you have a car, meaning something that's under 6,000 pound, less than 6,000 pound, a lot of people don't take advantage. They don't know about it. So there's a special deduction. Not only you can go with the life of the cycle, up to 12,500, there's a bonus depreciation of $8,000 that you can claim in the first year. A lot of people miss that, because when it comes to Section 179, when it comes to the vehicle, people know what's the gross vehicle weight rating. Is it over 6,000 pound? No, you're screwed. It doesn't work. But if it's over 6,000 pound, everybody knows you can claim large depreciation. This large depreciation used to be up to 100%.
Oh, okay.
Now it's 80% now. For 2023, it's 80% again. And I keep reminding that right now the taxes we are doing is for 2023. So when you're doing the taxes now, you can claim up to 80% of the vehicle price. And again, if you go back to the example, if you buy a vehicle for 50,000, you pay 5,000 of down payment. You claim 80%. 80% of 50,000 is 40,000. you claim 40,000 as an expense, as a depreciation on the tax return. If you're in 30% tax bracket, just by paying $5,000 as a down payment for the car, you save $12,000 on the tax return. So it's a big deal.
Amazing.
It's a good deal.
Yes.
If the vehicle you are buying is really over 14,000 pound or 7 ton, meaning, and they have special criteria around it, meaning you have to have 9 passenger vehicle, you have to have this big truck. But if you qualify for that deduction, then you have 100% depreciation. That hasn't changed. So make sure you know, as you rightly said, if somebody misses it, if somebody missed the deduction,
Correct.
the IRS does not come back to the taxpayer say, oh, by the way, you missed the section.
No, IRS
179.
will never do that.
Right?
That's why you need to have a very well-known, educated, and experienced CPA.
Absolutely,
Like,
absolutely.
Mr. AJ Kumar and his associates at Science CPA Services.
So the onus, the responsibility remains on the taxpayer.
Correct.
If you pay more than what you should be paying, your problem. If you pay less than what we are expecting you to pay, what the system wants you to pay, then you see the letter coming out, the auditor coming out. So please make sure you understand the rule, you read about it, find a good accountant, especially if you have a business, make sure you do it right.
Interesting, very interesting to know. Now, this, what you mentioned, light vehicle and medium vehicle and heavy duty vehicle, that's a 6,000 pound, that's a passenger. In order to claim that deduction, the vehicle must be 6,000 pound. If it's less than 6,000 pound, then obviously you're out of it. When it's less than 6,000 pounds, can the taxpayer and their families sit in the car and wait to see if that works?
And you're right. Yeah, and we see it every day. A lot of people miss this deduction. Even if the car is under 6,000 pound, you can not get up to 12,200. You can also get a bonus depreciation of $8,000. So in theory, even if the car is under less than 6,000 pound, you can claim up to $20,200 of depreciation. Go back to the same example. $50,000 car, you paid only $5,000. Your depreciation is $20,200. Even at 30%, you save $6,000. That's a lot of money, more money than what you paid for the car. So even if the car is under 6,000 pound, you can still claim a bonus depreciation more than the average calculated amount, $8,000 additional bonus depreciation that you have.
Yeah, anyway, interesting, very good. AJ must have put smile on some of the taxpayers' faces. So now they know that they can use the deduction. Once again, ladies and gentlemen, please make a note of this number, 908-380-6876, or visit their website, sciencecpaservices.com. In person, over the phone, over the Zoom meetings, all possible. Remember one thing, taxes are a very complex issue, and taxes can be very complicated, especially if you don't know it or if you know only half of it. So make sure that you don't get tangled in that situation. No question is a silly question. Give them a call, give Science CPA Services a call and ask them that help you out with your tax returns. In case perhaps you're not happy with whoever filed your tax return last year, or even if you did it by yourself and you realize you missed some of the deductions and tax return was not done right, that is the moment that you should go to Science CPA Services and have your taxes done right. And for that matter, in case if you have gotten any IRS audit note, Science CPA Services will help you out. With that note, let's hear a quote of the day from Mr. AJ Kumar.
Well, today's quote is, the best thing your money can buy is financial freedom for you. If you continue working to earn money, it's really not working for you.
Very good. AJ will have a quote, he has a quote, for every single episode. And my quote for every single episode is that make sure you do your taxes right. Make sure you call Science CPA Services.
Absolutely.
With that note, we come to an end of this episode, Tax Talk, right here on ITV Gold. AJ, thank you so very much for your time.
Sanjeev.
I am Sanjeev Pandya, wishing you all happy and tax-free days ahead. So long.
Thank you.